Hello and welcome back to this week's China news discussion. So I have 4 stories to discuss today. As always, there is no escaping the China-US tariff debate. And of course there was some big news this week, but I don't want to dwell on it too much because I think there are more interesting things to talk about. But as usual, if you are watching on YouTube, then you will only be getting half of the video. So please feel free to hop on over to Buy Me a Coffee and become either a supporter or a member to see the full thing. Also, if you're listening on audio, so Spotify or whatever app that may be, you are currently getting the full version, but of last week's news. So again, if you want the full version as soon as they come out, please do head over to Buy Me a Coffee and consider becoming a supporter. And without further ado, let's get into the stories. So, of course, the first story is about the news that broke this week that China and the US have reached an agreement following their meeting in Geneva. I don't want to talk about the meeting and all of that itself. I just wanted to talk about some of the stories and some of the ways that it's being discussed and not discussed by certain parties. So I've just taken this Economist article as a quick overview of everything that's happened and a little bit of Western style analysis of how the issue is being discussed. So the article reads, "A great trade victory over America is being celebrated in China, but its negotiating triumph comes with 2 stings in the tail." The view inside China is that America is faced with a tanking market and upset consumers, and so it blinked first. The truce is seen as a national triumph that has secured concessions, confirmed America's low pain tolerance, raised GDP forecasts, and made China a hero in the global south. The often acid state media's magnanimity is revealing. Quote, "The road ahead still requires both sides to explore and shape it together with wisdom and courage," intoned Xinhua. Others were more blunt. "A great victory," crowed Hu Xijin, a nationalist commentator. Yet there are worries for China. One is that the deal is so good that Trump may change his mind. The other is that the CCP may now backpedal on reforms. Many in China had feared a protracted near embargo after Trump's Liberation Day announcement on April 2nd. 6 weeks later, he has backed down. So this is also what we were talking about last week and also in the recent long form episode that I did, that people were trying to predict all of these outcomes and many people were saying, it may not even last that long. And here we are 6 weeks later. At least for now, there is a truce. Again, they may bounce back and come back with equally as high or even higher tariffs. We don't know. So trying to predict what's going to happen next is a bit pointless. But the article goes on anyway to explain sort of what's happened and what the effects may be. America will slash reciprocal tariffs on Chinese goods from 125% to 10% for at least 90 days. An earlier additional levy of 20% designed to punish China for its role in the fentanyl trade will remain in place, but its specificity suggests it could be negotiable. America halved a separate 120% tariff on e-commerce to 10%. China lifted its ban on Boeing aircraft, which it needs. Constraints on rare earth exports may be eased. The result is a partial restoration of trade and proof America cannot stomach a fight. The imperialists are all just paper tigers, wrote one netizen under a statement about the deal posted on the account of the American embassy on WeChat. Americans just can't handle it when their supermarkets run out of goods. Forecasts for China's GDP growth have bounced back. Goldman Sachs raised its estimate for this year from 4% to 4.6%. JP Morgan also raised its estimate to 4.8%. China will get diplomatic kudos in the global south too. Someone has to stand up and say that hegemony is unreasonable, Zheng Yongnian of Chinese University of Hong Kong in Shenzhen told one outlet. China's approach has won the support of so many countries. Xi Jinping rubbed it in at a meeting with Latin American leaders on May 13th, arguing China must champion true multilateralism and uphold international fairness and justice. I would say that that's something that he would say anyway, but fair enough. Yet, the tentative deal does come with 2 downsides for China. One is the prospect of an economic crunch could have forced leaders to undertake deeper reforms to rebalance its economy towards domestic consumption. Now they've been let off the hook, at least a little. That may explain the muted reaction in the stock market in Hong Kong, which fell by 2% on May 13th. The other danger is that Mr. Trump rethinks the deal. One sign of this is in the container shipping market. Rather than pricing in a return to business as usual, shippers are rushing to move goods in the 90-day window, according to Bloomberg, presumably because they worry what might happen after it. In Trump's new world, it's easy to call America's bluff and hard to cut a deal that lasts. I just wanted to talk about a couple of things based on this article. It's very interesting how at the beginning it sort of frames it as in China people are sort of celebrating, and it picks out a few comments that have been made. From what I've seen, because I've been trying to look into this, the talk about tariffs, or the talk about anything to do with the US really, has been very muted in Chinese media. I don't know if you remember a couple of weeks ago, we spoke a little bit about the CIA video that was released that was sort of trying to recruit Chinese officials. After looking several times again, I still found nothing about that on anything official Chinese news, Chinese social media, anything like that. And it's very similar with this story as well. I'm finding that what discussion there is about the tariffs sort of reflects the talking points that are in this article. Things about exporters looking for a rebound, things about China trying to pivot to a domestic consumption economy. I'm not seeing a lot of rhetoric. I'm not seeing a lot of vitriol. This is kind of in keeping with the belief that China is trending away from sort of the wolf warriorism that they had a few years ago, where they were very aggressive in their foreign policy, especially when talking about the US. Whereas now they're a lot softer, they're a lot more diplomatic. They kind of just ignore the US in a lot of situations. I feel like the US talks about China now much more than China talks about the US. They're kind of just like, well, if you want to pick a fight, you can pick a fight, but we're not really here to fight. We're here to sort of make deals and make friends or whatever. So like this article for the Global Times, I think, is a good example. The Global Times is a very nationalist newspaper in China, and usually you can find a lot of anti-US sentiment. If you were looking for somewhere to find it, you would find it here. But this article titled Chinese-US Tariff Adjustments Take Effect, Ports Exporters Witness Rapid Trade Rebound is basically the only article I could really find on the changes in the tariffs, and is just very measured. It just talks about, the fact that the talks have achieved a lot of progress. In light of the changes that have been made, China will make corresponding adjustments to its countermeasures, including both tariff and non-tariff measures on US goods. And the fact that the change in the trade agreement has meant that lots of major clients on US bound routes have resumed shipments and increased bookings. One operations manager says, "We've received multiple inquiries from shipping companies about urgently adjusting berthing schedules, so we're rerouting ships from other lines to handle the expected surge in shipments." As the most US route intensive port in South China, this is in Shenzhen, we expect exports to keep growing during the 90-day tariff suspension period. So it basically just goes on to talk about how, suddenly there's this huge surge in orders. Similarly, with this China Daily article, exporters pivot to home market amid headwinds. Even in the title, it doesn't explicitly mention the tariffs. And it says, Chinese exporters to the United States are increasingly pivoting to the domestic market as overseas demand softens, with official tax data showing a steady uptick in local sales in April. Industry experts said that the shift reflects how Chinese manufacturers are reducing their reliance on US markets amid trade tensions triggered by US tariff moves, and it also aligns with China's broader push to boost domestic consumption for long-term economic growth. Chinese companies that export their products to the US reported a 4.7% year-on-year increase in domestic sales last month. The share of domestic sales in their total revenue also rose by 2%. Out of 31 major manufacturing sectors, 21 saw domestic sales take up a larger share of revenue. It's become a long-term strategy jointly driven by business and the government. Relying on both domestic and international markets is clearly the more stable path forward. Nearly 85% of Chinese exporters are already engaged in domestic sales, which account for around 75% of their total revenue. Li Xiongfei, head of Olod, which is a kitchenware manufacturer, said that even though trade tensions are easing, the challenges we face until now, including a slump in orders and rising costs, shows how vulnerable we are without a strong foothold at home. It makes us realize that export alone is not sustainable. So, again, the language, the tone of the discussion is very even. It's very straightforward. It's not potentially picking a fight with the US or even blaming the US. It's kind of discussing it as more of a broader strategy of which the US tariff moves are kind of just one part of that. So I feel like even though it's been very dramatic looking at it from the Western perspective, in China, I don't know what it's like on the ground, obviously, at least in the media, people are making efforts to make it seem as if it's hardly had any effect at all, or any effect it has had is just reaffirming that the course that China has set for itself is the correct course. So yeah, I thought it was quite interesting to contrast those two approaches. I wouldn't say that the articles from the Chinese side are particularly celebratory. They're more reflective, if anything. But I feel like Western media is increasingly apprehensive. The Economist is obviously a global paper, but from what I've seen from UK papers, because we've just recently done a deal with the US about our tariffs, people are in a bit more of a celebratory mood, but they're still kind of weary about how the tariffs will play out long term. I feel like people in the West are a bit more jumpy about Trump, but yeah, Chinese media doesn't seem too concerned, really, which is quite interesting. Okay, on to the second piece of news. This is a piece in the SCMP. Starbucks kicks off process to sell stake in its sprawling China business as growth stalls. Starbucks sent out letters via financial advisor to several potential investors this week to solicit views on the China business and how to grow it. So this is very interesting because I follow someone on Substack. Their Substack name is Following the UM, and recently hers is all paid, so you have to read them as they come out. But recently she did a piece where she went to the headquarters of a Chinese coffee brand called Mixue, which is like a really mass chain. It's kind of like a Costa Coffee in the UK. I guess it's kind of like Starbucks as well, but Starbucks kind of positions itself as sort of like accessible premium, especially in China and other developing countries. It's not as mass. It's kind of seen as a little bit nice. So she was kind of saying how places like Starbucks are losing out because China has so many big brands like Luckin Coffee, which we'll discuss in a minute. But also you have brands like Mixue that are way more popular with millennials and Gen Z because it's more affordable, but they also understand the culture behind it, whereas Starbucks kind of expected to walk in with its branding alone and kind of take over, and this is sort of a reflection of that. So the SCMP piece continues. Starbucks has contacted private equity firms, technology companies, and others as it considers options for its China business, including a possible stake sale, according to people familiar with the matter. The coffee chain sent out letters via financial advisor to several potential investors this week to solicit views on the China business and how to grow it, said people asking not to be identified because the process is private. A transaction could value the assets at several $1 billion. Bloomberg News reported previously that Starbucks was assessing its operations in China, its second biggest market. The company has warned of macroeconomic and competitive pressures in the country, where the likes of Luckin Coffee and Coty Coffee have emerged as major homegrown players. Starbucks, which has more than 7,750 stores in China as of the end of March, generated about $740 million net revenue in the country in the quarter throughout March. Luckin's net revenue was $1.2 billion in the same period. Chief Executive Officer Brian Niccol said that we remain committed to China for the long term. We see great potential for our business there in the years ahead and remain open to how we achieve that growth. So I just want to contrast this article that's showing how Starbucks is becoming a bit fair weather in China to another article that's based in Singapore but shows how Chinese coffee brands are expanding and gives a little bit of insight into how they are so successful at different levels. So the piece is in Channel News Asia, and the title reads, How Chagee, Mixue and Luckin are brewing success in a crowded market. The Chinese tea and coffee chains offer lessons for consumer brands in a changing business environment. Chinese beverage companies are having their moment in the spotlight. Chagee CEO Zhang Junjie became a billionaire at age 30 after the tea chain successfully went public on the Nasdaq on April 17th. Just weeks earlier, beverage giant Mixue, now the largest food and beverage chain by store count, surpassing both McDonald's and Starbucks, listed in Hong Kong. These brands, along with Luckin Coffee, are reshaping the industry. So it goes on to discuss what the positioning of each brand and how they use their positioning to generate success for their specific target audience. Chagee has positioned itself as a premium tea brand with cultural sophistication at its core. Its collaborations reflect this, from co-branding with the Forbidden City Palace Museum to partnerships with designer Angel Chen at Shanghai Fashion Week in 2024, and a Van Gogh-themed collection that combines fine art and tea. Luckin Coffee, by contrast, focuses on urban youthful convenience. Its intellectual properties, with blockbuster video game Black Myth Wukong, beloved children's show Sesame Street, viral mascot Butter Bear, and the NBA's Houston Rockets, project a vibrant, accessible image. Meanwhile, Mixue leans fully into its mass market roots. Rather than associating with high-profile celebrities, it's built a brand identity around catchy jingles and its own IP. A mascot, Snow King, is instantly recognizable online and across suburban and rural China. Chagi's focus on exclusivity reflects its premium strategy. In China, it rolled out limited edition Forbidden City-themed blind box bookmarks and Van Gogh-themed branded merch. Luckin Coffee strikes a middle ground. In Singapore, a recent promotion offered cartoon character Maltese dress-up stickers, a playful but lifestyle-oriented reward that fits well with young urban clientele. In contrast, Mixue keeps it simple and mass focus, with Chinese New Year red packets and lucky draw prizes such as Snow King thermos bottles, glass tumblers, and plush toys and snacks, perfect for families, younger crowds drawn by affordability and fun. In terms of attracting customers, Chagi focuses on high-traffic upscale locations such as Singapore's Vivo City, Shanghai's Global Harbour, and Metro City, with stores designed to offer an immersive boutique tea-drinking experience. Luckin's coffee model favours small-format, no-frills stores tucked into high-footfall areas. Mixue's strategy is to be everywhere, opting for heartland spots in Singapore. In China, stores are in affordable, suburban, and rural store locations. None of these formats happened by accident. Each is a conscious extension of brand positioning to capture the specific journeys and behaviour of the target consumer. So they all have their scandals as well. So Luckin Coffee had an accounting scandal where it accidentally made up some sales figures that it definitely hadn't generated. But the focus here is more on how, despite these challenges, or with these challenges, they're still growing. They are still going through the aches and pains of becoming an international brand, but they've worked so hard on their branding and positioning, and they are very true to themselves, that they're able to replicate the success in other places. Obviously, we don't have these locations yet in the West, but I'm sure just like Starbucks went eastward, there's nothing stopping from Luckin and Mixue from coming westward. Bubble tea is already a huge trend. I've seen many stores that I used to see when I lived in Hong Kong now in the UK, and I'm always kind of taken aback when I see them. Lots of places that used to be what was the trend before, like frozen yogurt places, or even Starbuckses have now become bubble tea spots, whether they're just takeaway or sit-in spots. Most of them are just sort of hole-in-the-wall takeaway places. So I wouldn't be surprised if we start seeing these sorts of things crop up. Obviously, Starbucks could learn something from a lot of these places about branding and positioning. I think in China, the problem is that no one is buying into the sort of premium aspects of Starbucks branding, because that's very reliant on the fact that it's Western, and now Western things are not seen as so premium just because they're Western. That China has plenty of luxury brands of its own. So it's very lazy and very misguided for a company that isn't actually a luxury company, you know, like a Dior or something like that, or Louis Vuitton, to come in and kind of position themselves, oh, I'm a luxury brand just because I'm from the West. It doesn't work like that anymore. So I'm not surprised to see that Starbucks is losing ground, because from what I remember of living in China, they weren't really doing anything, and you have to be constantly promoting yourself. There's a lot of competition. So yeah. It'll be interesting to see what happens with the Starbucks deal, and whether or not they basically just fade out over time and are replaced with hundreds of thousands of Mixues, basically. If you are watching on YouTube, that is the end of the video. Thank you so much for listening. If you wanted to watch the full thing, we've still got 2 more stories to go through. One is about the India-Pakistan dispute and China's role in that. The other one is about China's relations with South America. So if you wanted to hear those stories, please do head on over to Buy Me a Coffee and consider becoming a member for £5 a month, or just a supporter with whatever you can afford today. Thanks very much, and I'll see you in the next one.